investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Thursday, the 6th of March. Now looking at the Dow, down 365 at 42,639, coming off the low. Now, it's very interesting. Almost every day, we've seen the opening reverse to the other side, or whatever the opening sharp move up. That was yesterday we had, let's go through it. We had, what is today? Thursday. So Tuesday. You opened down and you kept going down. Then all of a sudden, Wednesday, the market looked really weak and you kept going up. And today it looked very weak and we've come off the low very nicely. The low today was 42,397. We're almost 397. We're almost, don't tell me, we're 300 points. Almost 250 points higher. But the most important thing here is that the trend, the tide has changed. The tide is going down, but there are some clues, and I mentioned this to my subscribers this morning. I said, we've got a couple of things going on. For instance, round numbers. I always look at round numbers. Look, Microsoft had a round number, 381. And it had a very good 2 days after that. Tuesday it ran up. Wednesday it had a very nice move all the way to the 401 area. Pulls back today to 399.90. Now it's trading, it pulled back today to 393.29. And now it's at 399. So there are clues here that there are fund managers that are starting. We're along Microsoft from some time ago. But most importantly, what we're looking at, there are some clues to say that within the context of all the bad news, there are hints that buyers are coming in at certain points. Now, look at the arch formation, this double bottom from 385.58 in August of 2024 in Microsoft to 381 3 days ago. Now it's trying to bounce off it. Now, we've got the same thing going on. I want you to make a note here. Look. Ryder, this is really important stock for me. Ryder Systems, supply chain, transportation, fleet management solutions, up in the all-time high area. What does it do? It makes the top at 171.78 back in November of 2024, pulls back pretty sharply down to the 150 level. Then it rallies to where? 171.59. Pennies away from the all-time high before, and then it takes a dive and makes a lower low from the cup formation. We've got, let me see, we've got another one. I wrote it down here. Is it Marvell? Marvell. Look at this. Marvell goes to 126.15 back in December, pulls back sharply, rallies strongly. Where does it go to? 107.48, less than 2 points away from the all-time high. Then it tanks, and where's it trading now? It's trading now at down 15. Oops, there's the price. I'm busy looking over here. There's the price, 74. So I always look at those double bottoms and double tops. So this and round numbers. So now we've got something that says you can get very bearish, but it is not just stock specific. In other words, AZO. Look at this, fantastic, all-time high as we're speaking. AutoZone auto parts. I spoke about this the other day. The fact that cars are so expensive that the auto part companies are really doing well. You've got Orly, that's O'Reilly, makes a 1389.05 all-time high. And then you've got AAP. I mean, look at the difference. This is Advanced Auto Parts. I don't even know when the all-time high was. All-time high was sometime in 2022, I think maybe January. It goes to 240 level. What was the exact high? 244.55. is trading right now at $34. So I like to point that out all the time, that you can be stock specific. For instance, there are stocks in the healthcare area like GEHC, which is way off the peak E, all-time high that it made. But also look at the double top. Look at this. It had a high September 2024 of 94.55, and the recent high on the 14th of February was 94.80. 94.80, 30 cents, less than 30 cents, less than 30 cents higher, and a double top having gone down to the 77 level. How these things work, it's just amazing to me. But then look at the one that we have, which is Solventum. Yes, it's pulled back from that big buy that from Thermo Fisher that spiked it up to the 85 level, and it's now down at 76. But you can see, look, that's a different chart pattern altogether to the GE healthcare. So I'm looking at this and I'm saying, we want to be stock specific. We raised a lot of cash. We are short the Dow. We are short the S&P. I'm not afraid to put money to work for my subscribers in what is working. I've spoken about HG, how the copper has suddenly spiked high. And look, it's actually holding that. So is this now going to be a commodity rally? And will it be a commodity rally that helps the commodity stocks? Well, we'll see. I mean, this is the way I'm looking at the market. I'm saying, don't just get, let me just do this. I haven't finished my preamble about the different sectors for my opening gambit here. So I'm just saying, look at the steel stocks, SLX, holding pretty darn well when you think about what's happened. And we did have this, I got out of it. But I think it's important to note what's happening here in the macro picture, that there are areas that are starting to hold, at least for now, quite well. Are we going to have, I'll do this, I wasn't going to do it now, but I'll do it now. Are we going to have this? Are we going to have this? Are we going to have this? That's okay. And I've made a big deal about this. This is the monthly chart. I don't want to make any predictions on this monthly chart other than to show it. This is the XLF, financials in pink, and the SPY, the S&P 500 fund, in blue. And look at the power. Look at let me squeeze it so that you can see it even better. Look at the magnificent way lows have been made together, highs have been made pretty much together. And look at that, we're making some kind of, this high in the XLF in March has made an all-time high. The S&P made its all-time high in February. But look, they're both pulling back. But pulling back doesn't mean to say, look, you can pull back, but then you can still go higher. So that just says to me, monitor this, because at any point in the next 2 months, if the blue SPY starts to come down to the 520 area, together with the XLF financials, including JP Morgan and all these the major money center banks, then I have to take note of. So I've kept this here just to say I'm watching it. Now we can go back to our story. What is our story? Story is now the S&P futures are only down 58 after having been down way down in the, what was that? The low was 550, right there. 57.53. And now we're trading at 57.94, 20 points higher. But the day is young. I'll be right back. Basil Chapman, Tiger Ignitions Hour. Dow's down 300.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
All right, so folks, we're back. So let me just do this one more time. So the industrials are now down 273 at 42,731. Not a bad candle. We've got the S&P also coming back quite nicely, down 48. Very good candle so far. You've got the QQQ down 4.80 at 476. Not a bad candle. IWM coming back down $1.65 at 208.83. Not a bad candle. Let's go to the gold. The gold is now down a little bit. It's unchanged at 2925. Silver is acting quite nicely. It's up 0.07 at 33.21. You've got high-grade copper. High-grade copper is down just a fraction at 4.789. You've got crude oil. Crude oil is down sharp, down 0.04 after being down very badly yesterday. You've got bonds right now. The bonds, I didn't want to see that. Now they're down almost a point at 116.23 and there's no other way I can count that. There's never an H. So that peak F, and that would be an instant restart, but you took it out sharply there. That is hinting that we've got to be careful that the rates we're starting to come down very nicely. Now they kind of stalled, and that worries me some. What am I missing here? Did that. I want you to get, the VIX index. So the VIX index today didn't spike to a new recovery high to the 2635 level that it was at Tuesday, but it is up $1.66 at 2369. If by day's end it starts to go under 23, goes to 22.90, and the Dow comes back very strong, what I said to subscribers this morning, if the Dow is minus, I think it was 180 or more after 130, that just says you got to be careful. It should be a lousy close. But if it's come back strongly, it's only down like minus 50. I mean, that's just saying that now fund managers are starting to say, there are some bargains out there. Hey, is General Motors at what is it, 4.4 PE, what, 4 or 5? I don't know what it is, but it's very low. Is that now a buy? Well, it's down only 80 cents, but you've got so much going against them right now. You got the whole EV thing, although I don't think they have as many EVs as many of the other auto companies. But you've got that going for you. Let's see what Ford is doing. Ford is down just 13 cents at 9.30. There's just, you're sitting there with tariffs and stuff. That's a tough one. But look at GE, General Electric, holding very nicely towards the all-time highs. Is down at 3.46 at 199.08. Hey, that's good action, because I always like to compare it to NVIDIA. They're two separate things entirely. One you buy because it's in the cutting edge of technology. Now I think it's less so. It's still in the cutting edge, but that competition and having become overbought says it's got a little bit of a problem. And it's down 2.25 today at 115. Didn't take out the low 3 days ago. So far, that's a good sign. But I'm watching it closely because it is a tell. I mean, someone asked me about advanced micro devices. I just said, well, I was wrong, because I said, they said, is it worth getting into advanced micro devices? And my answer was that I think that the whole semiconductor industry is still under pressure right now. So I should have said, as a quick trade, if it holds yesterday's low and can start to move higher, as a quick trade, yes, because it's already come back from the low of 98.67 to 100.65. But wow, this is a lousy looking chart. It really is. So two separate things. It depends on the time frame that you're looking at. But in the meantime, this market is trying to come back very nicely. I almost had some buys from yesterday's close, and then I thought, we've got so much whippiness. The market, it gives you a hint of something, and then by the day's end, it's reversed. For instance, yesterday it looked terrible during my show, and then you had this big move up. And the day before, it went a sharp move down, was it? Am I reversing things? Yes, that's exactly right. Let me just do this one more time. That's right, yeah. So look, even today it's trying to come back, made a lower low, but it's really trying to come back. And that's an important thing. So this could be a basing area, and the Dow hasn't taken out Tuesday's low, and hasn't even come so far. It got kind of close to the 41,844 low of January the 13th, where we had the buy signal. We don't have that anymore because we went short. But in the meantime, I'm watching this for rebounds, but I suspect that this is going to be a bumpy ride for March, and that at some point in March, we'll find out whether the key metrics that I look at are becoming extremely oversold, so that we could get a really good rally, a very strong rally. I'm talking about one that lasts many weeks. All right. So with that said, a couple of questions came in. Let me just look down to see if I can actually first time. Yeah. So I wanted to show you this. I think this is very interesting. Besides the questions I've got, is this where I wanted to go? Yes, this is where I wanted to go. I wanted to look at, am I correct in this? Yes. So look at this. So you've got stocks like Visa. Look at that. This is a daily chart. That 9-period moving average has not yet turned down. You've got MasterCard. That moving average, that 9-period moving average, today for the first time has just crossed negative. The XLF, I'm using just one indicator. It turns green when the 9-period moving average goes above the 14, and it turns pink when the 9-period exponential moving average crosses negative under the 14. That's the only thing I've got here. But look at this beautiful. Look at this. If you had bought XLF back in, what was that? In 2024 in August, you held it all the way. So that was August, around about the 42 area. You held it all the way until it crossed negative at 49 back on the 12th, December the 12th. Then it flipped back to positive right there on the 16th of January. just after the 3 days before the 13th of January low, and then it crossed pink and then green, and now it's gone pink. When you do that twice, the second time you have to take this quite seriously. And that just says, whoa, be careful, because what we're looking at is the XLF, the financials, have turned down again for kind of a double top area. This was almost an exact double top, and then it broke to like a right arm extension high, and then it broke down. So I'm watching it, and I can go through many stocks like that. I just wanted to point out that telephones in this category hasn't turned pink yet. It's been a spectacular move. Communications, Walmart, I think, has already turned pink. Yep, turned pink. Costco's already turned pink. COSC. It hasn't. Costco's still strong, still green. So I'm just saying that this is a period where with what's going on in the administration, they have an agenda, and you're going to have to let this agenda play out before you really know what's going on in the market. And that's the market is saying. We're being very careful here. Now, I anticipate that the rally might have failed. Let me just see. So this went to the 1 minute chart, went to peak C, peak D, the EF, and now we're starting to pull back. Down, S&P's down 61.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
I had a question about Immunity Bio Inc. Oncology up 5 cents at 310. I should mention that the market has held. It did pull back, held support. I'll just show you this very quickly. Look at that support level, Chapman. We've automated support level. Look right there, 5788 that red line right there, support, and ran back up. Now it's going to test the. So that was a D. What did I say? DEF, right? DEF. But this is early. So if you are starting to try to position yourself for a move that goes into May, that's one thing. If you've got time, but on a short-term basis, I would treat any buys right now just as short-term trades. And if they start to work, you can add to them. That's the best way to do it because there are certain stocks right now that are holding very well. So let's go back to the what we're looking at right now. So Dan said, Basil, we've been discussing IBRX in the Den. This is the Immunity Bio Inc. for some time. Like any biotech, that is, it has had huge spikes and dumps, but the med and Anktiva seems to be a potential oncology holy grail, with some saying it could potentially be considered preventative medicine in the future, vaccine-like. I realize the daily, weekly dreaded H, that's the A pattern we always look at, the arch formation, that then takes out the left side low. If it doesn't, that's usually a good sign. I realize dreaded H are not looking great. You'll probably say the monthly is so bad you would even look at it. You wouldn't look at it until it clears 440 or so. But this stock could be a mega, in my opinion, for what it's worth. So I'm going to put that out there. You publicly mentioned it in the Den, so I'm going to publicly mention here. Dan's had a lot of these that he looks at, and he does a lot of work in terms of trying to analyze the product they're producing, the potential for it to pass the various tests of the FDA, and for the product to be in the public domain as in this case, a preventative medicine, or in some cases, hopefully a curative. But in the meantime, let's look at it. It's just a lousy chart. It's at 310, but it's a biotech. And when it starts to spike, it can do it once, or it can just continue to spike high. You don't know. This has not got it hasn't got the character yet of having a sustained move, even in the day, just pop it. It has made stair-step moves to the upside from the 2.8 or something, 2.28 low that was made on the 14th of January. So going all the way to the 430s, I mean, that's almost a double. That's really good. So as a biotech, that's something to note. But it is a biotech, and the most important thing is how does it handle 522? Fabulous percentage gain if it gets there. 398 is the 200 period exponential moving average, and hit it once, went above it into the 420s, and then came down. That's going to be the first set of resistance points on that 200 period exponential moving average. Second one is 522. Those are the levels to monitor. No, I think the monthly chart, let me look at it on a bigger scale here. Monthly chart, yeah, look at that. Once upon a time, it was up in the 45 area. Was it 45 round number? No, 45, 42. That was back in February of 2021. This is 4 years later, and it's down in the biotech, down to 312s. And it has this swoopy look, and it says that sometime in 2025, if it can clear $10, then you've got all of this open resistance level. 1254 in the monthly chart was a high. Then it go all the way to the 6th June of 2021 at 1814. But I am going to say on a very short-term basis, if this takes out the low of Tuesday, which is at 270, then you could just sit there waiting quite a while. So this is in the biotech area. Talking about biotech, look at this. IBB. I went to a peak F back in the beginning of February. Let me just type that in right there in the 140s. And very sharp pullback into the 133 area, pops up to the 140 area, and then comes back down, and it's now holding okay. Holding okay for a biotech, that's one thing. You really want your biotechs to be making higher highs and higher lows. When it starts to stall, it says that this is an area that just at this particular time is just not showing the kind of interest that you would like. But having held the 200-period exponential moving average in the weekly chart so many times, that's like a springboard. It usually is a magnet in the sense that it can go up and then down and up and down. But it keeps, this one has more moves to the upside before coming back to retest the 200-period moving average and then make a spring to the upside. So that's your clue. So 133 is your springboard. At any time in the next week or two, if it does pull back to that level, let's see if it has a little spring to the upside. Okay, next thing I had a question about, I wrote it down. Oh, yes, XPEV. So thank you for that information. Yeah. So I did see the ad, but I didn't see the, I would have liked to have gone into the showroom. This is Chapman. I know I haven't had anybody mention it, so that I don't know how it's how you say it with X in Chinese. I think that it's sh. The people that I know that have an X, it's usually a sh. So Chapman, Inc. designs, develops, manufactures smart EVs. Nice move up again today, up 56. I said about a week ago, this is acting very well. It's one of the few companies in China that at least I know a little bit about, only in the sense of what I've read. I did see a couple in Sydney, Australia, and as I said, I did see that ad for the showroom, but I didn't get to the showroom. And it's interesting. It has so many models that I couldn't really talk about until I see all the models. But it's a cheaper version in electric than many of the other manufacturers, and they're all over the world now. Well, many countries of the world. So this is acting very well. I put this together with Baba, which I believe is the Amazon of the talk about the Amazon. Got a friends going to the Amazon this weekend. They're going to go check it out. Okay, Amazon right now is trading up 8 cents at 141.18. That's very good action. Now, I need to talk about this for a moment because I did say it's interesting. I thought about it very seriously about taking a little bit more off our positions, which we did yesterday, our short positions, and I've decided I want to keep it there now for a little bit longer. At the same time, I thought about what if we went back into the long position just as a trade. Wow, that gets so confusing. We have the Dow longs from 2020, 2022. We have both, and we have the 3 times long as well. This is what you hear on the ad. Never have it more than a day. We've had it for years and years and years. Yep, it does dwindle because that's what happens. It gets recalculated every day, but it's still more than a double. But most importantly is the way I'm looking at this market, there are so many, the vicissitudes of the market, there are so many potential negatives out there that can outweigh very quickly any positives that I think we're really stuck. That's more important. And I think we're kind of in this rectangle formation. I don't think we break out yet. I'll be right back. Dow's down only 177. Excellent action.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So, wow, I've got to look at this and I've got to say, look, the 10-minute chart, look what happened yesterday in the 10-minute E-mini. Let me just go all the way. Look at that. At exactly this time, well, it was a little bit earlier. It was at, 12:30, a little later. The 9-period moving average crossed positive, and the E-mini went all the way to a peak D. Remember, that's the objective in the buy signal to buy mode, and it was a 2-click session. I did not do it as a 2-click session, but look at that. Once that 9-period moving average crossed positive, it stayed there all the way until 1950. That was 1950 on the 5th. So that was 7:50 p.m. right there. And then it went back to green, then went to pink, then green, pink, and then it went pink and crossed negative right there at 2:30 in the morning last night Eastern time at 5848.25. That's 5848 in the S&P. And it has crossed positive now right there at 57. The low is 57.87, the high is 58.02. So I'm watching, but now this 200-period moving average right here, that's going to be a big thing. Back when it was here, I would have said, gee, to get to this 200-period moving average, you're in the 5,700 area. Woo, that's going to take quite some. Whatever it is, it's done that. And that's really impressive. All right. And yes, the 200-period moving average in the 5-minute chart, it could become something to monitor at 58.08. We went to 58.20. Now we're going to watch this closely. So I'm impressed. And that's the reason why I'm saying the very specific. One of the reasons why we wanted to keep our long positions as long as we could, because most of them we got much, much lower down. So you don't want to keep getting in and out. You've got your core. We've taken profits. Some of them we took right at the exact day of their tops. And now I have to monitor it because this is going to be a little bit more difficult to get back in if, in fact, the Dow closes very strongly today. Yes, Sharky, we'll look at the Octa in a moment. I just wanted to finish this to say that within the context of rallies that fail, this choppiness, look at this, the Dow. Now, I often talk about this. It's like the sandwich effect where it goes red, green, red, and it sort of forms a cluster formation like a spring. This is going to become a spring to take off. Well, if it's going to take off, the 9-period moving average in the Dow, 43,269, that has to be pierced. But look at the distance. The reason why I didn't want to get too carried away on the long side is the distance in the 914 of the daily chart of the Dow is so unlike look what happened here. The turnaround on the 13th was so powerful and so quick that it very quickly went from very negative in the 914 to green. But my anticipation is that this is going to take quite a bit longer, and it's going to be a very bumpy ride, so that maybe we're stuck in this area trying to build a base, and then one day we just slip under it, and that just scares the den out of everyone. The VIX goes to a high, and that becomes our buy signal to go for a much higher highs. That's my thinking right now. In the short term, yeah, we could get a trade. We could get a trade up to the 9 to then the 14, 43,489. But to get this pink to move positive, you'd have to be up in the 43,900 to 44,100 area where we were just 4 sessions ago. But that's where you'd have to be. Can it happen? Sure, it can happen, but I think it's going to be choppy. So Octa, was it Octa? Yeah, Octa is something that we've monitored for a long time. But I don't believe we've actually ever had. Whoa, what a nice move! I looked at this yesterday. I typed in the E. This is not an E. This looks to me like a brand new E/A. So if that's the case, Octa. Let me just type this in here. E/A. The reason why I have an alternate count is because right here the technicals need to just confirm a little bit more, and then I'll be able to say any pullback should be monitored, because the 110 to 105 area trading right now at 115 down $1.22 after a spectacular 2 days movement, which was just messing around the 90s, is really quite something. But I am calling this an F in the weekly chart. So let me see, was there a question as to what to do? So this is Octa Inc. I love the stock. I like the fact that it's identity solutions, authentication, authorization, automation. That just fits in the groove right now, because I think this is tariff-free. At least I better look into it a little closer before I say that. But that's kind of what I'm guessing. This is a stock that once was up in the almost 300 back in 2021, and it had a little tumble down to the 40s, and now it's up in more than double at 115, almost 3 times the thing. So it's supposed to look at before end of the show. Yeah, what to do? Okay, what I would suggest to you, Sharky, is this. It's really tough to buy a stock that was trading in the 90s, actually in the 80s, just 4 sessions ago, and is now 40. It's almost 50% higher. But at the same time, it is in the area. If you're looking at the weekly and the monthly charts, this is something. Now, I can't say to you, I would start a little position here at 115, but if in March, if it ever goes down to 102 to 199, let's look at it again, because that's where you'd want to add. That's really tough. I don't think you do options, but if you're doing options, this is one where I would take an option out of the money, maybe 120, and I just set it aside. It may be 2 or 3. It might cost you, $5 each or $3 each, and just let it sit there and say that's money that I'm prepared to put aside, because at some point, even with a decay, I think it's going to. This is a stock that looks very much like it wants to get to the 125, 128 area over the coming months. On a very short-term basis, as a trade, and I know that you're able to do this, you could start a position here at 115.45. I'd have maybe a 3-point stop. And with a trading stop, as if it starts to move higher, I would have that trading stop. And you might get stopped out and make a little bit of money, and that would be fine. But it's really tough. I mean, just visually, it looks like it should. It doesn't know that, but we know that. It should pull back at least to the 112, 110 area. But it's acting so well right now, and it acted so well over the last 2 days. Obviously, earnings were good, that I think it's in play, and fund managers will be looking at this on every dip. And that's what I'm looking at. So I hope that helps you. Thank you, Joey the Den. Bumpy Ride. Yeah, Bumpy Ride, Harry Potter. Okay, yeah, I can see Bumpy Ride, that's for sure. So with that said, the day is young, and I'm anticipating we don't know how this market closes. I don't know what the impetus was for that big move to the upside, but looking at enough charts, looking at the 9-period moving averages on so many charts, now starting to move negative for the first time, it's just telling me that this is a work in progress and that it's going to be bumpy. And at some point, we'll have some news event that just takes this market lower. And that's where we want to monitor it for some kind of a VIX index that goes somewhere into in this case, I'm going to say the VIX index will probably have to go to 33 to 35. And that's where we'll be starting to look to do a lot of buying. I'll be back in a moment. Dow is now down 151. That's pretty damn good.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So as I was saying, the VIX index is at a peak. See, it doesn't have to go too deep, but everything about it suggests that it should go higher and break the 2635 level over the next couple of days, unless something spectacular happens. But I have to tell you, I don't believe this rally, and I do my very best for subscribers to pick the lows and the highs. We've got pretty much on the day of lows, we've pretty much got them. The last one was January the 13th, and we get pretty much close to right at the highs. And it just says to me that the way this market's acting, it's being a little bit blasé about the impact. We don't actually know exactly what's going to happen. We don't know who's going to produce tariffs that never even thought of. We don't know how they're going to impact the different things. Even if the tariffs are lessened, and even if you've got something like General Motors and Ford, you've got yourself a month. They don't know what's going to happen at the end of the month. So it's a work in progress. And that's what I'm saying. It's just there are a lot of risks. I don't mind having cash. Cash is great because there are so many fantastic stocks that have pulled back. We'll have a very nice choice. We always like that. So just before I wrap it up, you're going to go to Steve Rhodes. Should be a wonderful show with Steve again. And check out my Opening Call daily newsletter. All I'm looking at here is what is holding up in this particular phase going for the next week or two. I'm very impressed with Microsoft at this point. We do have it. I did want to add on that round number 381 low. But I think this is still a work in progress. There's a look at the weekly chart, still pretty negative at this particular point. Do we want to add as a trade? I might do that, but at this particular point, I just feel very strongly that to have a good cash position is very important. Oh, I didn't finish with gold. So I just wanted to show you this. I had a question about why the GDX is lagging the gold itself. Look, it's doing quite nicely. It's at 41.59 right now. But the real issue is that gold itself, these are the